Imagine waking up one morning and discovering that the money in your pocket is no longer tied to gold. Today, that sounds completely normal. But for most of American history, the relationship between money and gold was one of the most important financial rules in the country. And when America finally broke that relationship, it changed the economy forever. For decades, the gold standard meant the US dollar was linked to a specific amount of gold. In simple terms, the government couldn't just create unlimited dollars. The system was designed to make money scarce, stable, and trustworthy. But there was a problem. America was growing much faster than its supply of gold. Factories were expanding, banks were lending, businesses needed more money, and when the economy needed more dollars but the gold supply couldn't keep up, the system could become extremely restrictive. Then came the financial panic of 1907. Banks failed, people rushed to withdraw their money, credit disappeared, and the government struggled to respond. The crisis helped convince American policymakers that the country needed a central bank. In 1913, the Federal Reserve was created, but gold still controlled an important part of the monetary system. Then came the Great Depression. Between 1929 and 1933, thousands of U.S. banks failed, unemployment exploded, and prices collapsed. President Franklin Roosevelt took a dramatic step in 1933. The United States suspended domestic gold convertibility and restricted private monetary gold ownership. The goal was simple: give the government and Federal Reserve more flexibility to fight the economic collapse. And this is where the gold standard story gets interesting. Gold wasn't simply good or bad. It was a trade-off. A gold-linked currency could limit excessive money creation. But during a severe economic crisis, that same restriction could make it harder to expand the money supply and stabilize the economy. Then World War II changed the global financial system again. In 1944, representatives from 44 Allied countries met at Bretton Woods, New Hampshire. They created a new international monetary system. The US dollar became the central currency of the system, and foreign governments could exchange dollars for US gold at a fixed rate of $35 per ounce. America now had something incredibly powerful: the world's dominant currency, and the world's largest gold reserves. But that system couldn't last forever. By the 1960s, more dollars were circulating around the world. While America's gold reserves were under increasing pressure, foreign governments began demanding gold for their dollars. The United States was losing gold. Then, on August 15, 1971, President Richard Nixon announced that the United States would suspend the dollar's convertibility into gold for foreign governments. The Bretton Woods gold link was effectively broken, and America entered the modern era of fiat money. The dollar was no